red, so Bitcoin is down 3.38% as the Fed comes out and slams markets. We are falling from a critical pattern which we've been monitoring on the Bitcoin chart. I'm going to show you all the key levels, what's going on. We've got altcoins literally tanking. Is this bad? How far can we go to the downside? What are the risk levels? We've been monitoring this for a long time, guys, and I had people commenting on my videos. Why are you spreading FUD? Why are you saying this? What do I gain from doing that? If I see a bearish pattern in the charts, it's my duty to show you guys that pattern and bring it to you, so you're aware if we're moving upwards, if you're moving downwards, and you can prepare your strategy sensibly. If you don't understand that, you're at the wrong video, guys. You need to go find the really ubiquitous channels which will pump certain coins for you. Leave you a link in the description to do a 100x leverage trade. Go find that channel. But if you want realistic TA blended with fundamentals actually explaining to you what's driving this price down, what videos today are showing you exactly what's driving this price down today, hit up the like button, subscribe, watch to the very end. If you like my perspectives, consider joining our course member lives, ijaz.uk/member, links in description. But without further ado, you can see, guys, we were forming this descending triangle pattern here, and we were monitoring it on the hourly. You could see that the initial cause for concern came from after the retest. This was a perfectly healthy breakout from 44.5. We ran up, we got rejected from 48.2. We got rejected down this trend line. We came for a retest at 44.5. In and of its own, that is perfectly fine. We went back up to the upside and we created lower highs. We started forming this triangle to the downside. We had a fake out here, liquidations back in. Tried to break out again, went for the retest, and broke straight back into our descending wedge. And this is where things started to get a little bit gnarly, because we can see from a technical perspective, breaking down from this descending triangle brings us back into the larger pattern at play. And the larger pattern at play, it took us 1, 2, 3, 4 times to break this key level, and we broke eventually out. So to be going back into this pattern is not the best pattern to be going back into. We've got multiple levels of support coming in within the wedge, but the reality is when we start to play this game again, we have to look at what is the risk to the downside. And the risk to the downside gets you back to 37,000 at this pivot point here. And even at the bottom of the wedge, we have to start talking about 33 and 34,000 again here on Bitcoin from a technical perspective. Now, what is driving markets? What is panicking markets? Well, the clear thing is we can see the US markets are down. We've got the Dow Jones down almost 1% today. We've got the S&P tanking 1.4% and the NASDAQ 2.5% down. Volatility index has spiked 16% today. What is going on? What is going on? If I click into the NASDAQ here, let's go here. Let's look at the SPY. This is the SPY on the 4-hourly. Blood just bleeding. Look at the gap down here. Let's look at the QQQ, which is your NASDAQ. A lot of blood here. Big red daily candles here. If I go to the hourly, you'll see how pronounced this is. Things are just selling off right now. Risk is rotating off. Remember, if risk goes off, this is no bueno for Bitcoin. Bitcoin will go down. It's still treated as a risk asset today. And unfortunately, this has come at the level of 44.5, which was a key level for us. If we're unable to hold this and we fall back into the wedge, we need to see if we can hold intra-wedge support at 43.5, 43, and then 41,659. And if we don't, then we can start getting worried about breaking to the downside of this larger wedge, which I've shared with you, can lead to significantly lower levels. But this is what's slumping the market. What is slumping the market is that a bunch of key Fed officials have come out. And let's head over to my Twitter because I tweeted about this as well. A bunch of key Fed officials came out yesterday speaking very hawkishly about the state of inflation. Okay, very important. I posted this update on Twitter. Go and check this out. Quick update on what the sugar is going on in the markets. Because what has happened is 2 Fed officials have come out and they've spoken very aggressively around the need to rapidly increase interest rates. Now remember, when Jerome Powell came out, he said we could expect a 0.25% interest rate hike. In essence, that's what the market felt, right? We're going to get a bunch of steady 0.25% rate hikes. And in fact, when they're coming out with tonalities, and these 2 particular Fed officials, Brainard and Marie Daly, are particularly highly regarded because they're seen as doves. So when you've got doves who don't like fast tightening policies, fast increase in interest rates, come out and start saying things that they're going to tighten faster, then what does it mean for people like Bullard, who's known as a hawk? They're going to want to smash interest rates all the way up, right? So this is what's scaring markets a little bit. Now, there's another hidden egg which is spooking the markets, which a lot of people are not talking about, because the interest rates in and of themselves is not what's spooking the market. And I've proven that because we've looked here at the Fed rate monitor tool, and we can see that for May the 4th meeting, 77% of participants, and in fact this was 80% when I checked yesterday, had priced in a double rate hike already. So does that mean the market's expecting more than a double rate hike, a 75 basis point move, a full 100 basis point move? No, I don't think that's the case. What is the case is the elephant in the room that people aren't talking about, and that is the balance sheet shrinkage. Okay, remember, we went for a process of printing. We were printing a lot of money every single month. I think to the tune of 120 billion each month being printed into the system. Now, what the Fed has announced, and Jerome Powell mentioned this when he increased interest rates back on March the 6th, was he's going to announce this balance sheet shrinkage plan. And he even said it can come as soon as the May meeting. And the May meeting is now 4 weeks away. And now when you've got these Fed officials coming out saying inflation is there, it's worrying people, there's a fear that they could shrink the balance sheet much faster than before. Okay, let me explain in layman's terms what this means. Throughout the pandemic, the government was printing money. Think of Jerome Powell with the money printer, putting all this money into the economy, right? That's what he was doing, 120 billion each month. Now, to reduce inflation, not only is he increasing interest rates, which we know about, the market's not too concerned about that in my opinion, but he's also saying, I'm going to take a Hoover and suck up the money that we were printing in all this time. Okay, so think of how juddering that can be. So not only are you saying you're braking the car, like let's say you want to slow down a car, right? Not only are you braking, but you're going to have 10 people pushing it from the front to slow you down even further, right? That's what he's doing. He's putting thrusters at the front to really slow down the aircraft. So this is going to impact the economy. And the worrying thing is, in 2017, 2018, when we had balance sheet reduction, we saw it to the tune of about 50 billion a month being reduced, sucked out of the market every month. Now, early indications have shown this could be anywhere from 80 to 100 billion this time around. And that is what's spooking market. Taking out that liquidity from the market is going to turn you risk off. And that's why you're seeing the NASDAQ down far greater than others. High risk is going to get smashed because high growth companies, think of your tech companies, think of your high growth companies, need access to funding, need access to capital. Companies which are cash rich on their balance sheets, they can ride this out. And that's why you're not seeing those get hit as much. But high growth companies, they're going to feel the pinch. And Bitcoin is correlated to the NASDAQ and to the high growth companies. So Bitcoin is falling into this pattern right now. If we look at the fear and greed index, we can see the fear and greed index is showing a score of 48. I trust this is going to be even lower if we fall below this level and stay below this level back into this wedge. So if we get a confirm back into this wedge, that's going to be a problem. Okay. Now let's try to search from some levels of support, because you can see we've lost our EMA ribbon here on the 4 hourly. If we go to our daily, let's get zoomed in on this chart. Like, let's go to a tidier one. This is where you can kind of see some areas for hope, because I've given a whole bunch of doom and gloom. What are the areas for hope? Well, the fact is, on our daily EMA ribbon, at this point, it's just a normal retracement, right? This is okay. We're in the middle of our EMA ribbon. We've not even gone down to the lower levels. Where things start to get worrying, let's do that back on this chart. Where things start to get worrying is when you get to 43.5 and then 43 flat. A close below 43,000 will now flip you bearish again on our daily EMA ribbon. So in other words, you look at this big wedge pattern we're looking at here. Okay, if you look at this big wedge pattern which we're here, we've got this element to play with. If we close below 43, we start heading towards the bottom of our wedge, and then we start get worried about falling to the downside of the wedge, and we know the implications that could have. That is what we're looking at here on the daily. On the weekly, similar. Because we haven't been bullish for long, we held barely half this week above, and this week we kind of just barely, even though it was a red week, we stayed above our EMA ribbon. Because of that, this could easily throw us back down, and this would be really bad for our weekly candles. You can see here what would be happening. You'd almost be getting this huge head and shoulders pattern here on Bitcoin, which you don't want to see in the charts. Okay, so this would not be ideal. We need to find some support and build some strength here on Bitcoin, but the market is not playing ball right now, and that is what's causing a lot of the problems in the market right now. So this is exactly why I was telling all my course members and all you guys on these videos to not chase the green candles. Okay, we knew we had a period where between now and May we potentially could have had a rally, but now that the Fed has come out, who gives them these, slots on mainstream news and spook the markets? We've tanked to the downside. And we have to remember, the Fed officials, their job is not to prop up the markets. They don't work for us. They don't help us make money on our crypto or our stocks. They couldn't care less. They're there for the average consumer to keep employment in check and to keep inflation in check. So they have to come out and say these messages to make sure the average consumer, whose gas bills have gone up, whose utility costs have gone up, and the rest of it, don't feel like the Fed is not doing anything. So that is why we're seeing these destructive comments in the economy, sending stocks to the downside. But in the long run, this is nothing new, right? In the long run, this is nothing to be spooked about. So any retracement to the downside for me, yet another buying opportunity, because nothing fundamentally has changed. Nothing in the Fed's game plan has changed, because they were always going to do this. Nothing has changed from what Fed official Jerome Powell said on March the 16th, saw a 0.25%. I suspect personally we're still going to see 0.25%. If we get 0.5, big deal. The market's going to rally anyway, because 70%, not rally, but it'll be okay because 70% has already priced in 50%, 50 basis point interest rate hike. If we get a 0.25% interest rate hike, the market's actually going to rally because they've priced in 0.5%. So the only way the market can tank after May the 4th, I think it is, is if the balance sheet shrinkage comes in really heavy. That is the one bit that's not being priced in, and the bit that the market could be pricing in literally as we speak now. So there you have it, guys. There is an update on what the heck is going on with Bitcoin. Sometimes things aren't as easy as just, oh, look, it's a descending triangle pattern we've broken down because of liquidations. No, sometimes it's nuance. Sometimes it's things going on in the macroeconomy which affect our decision making, and which is why you have to be so careful when chasing green candles and planning for your entries. A lot of people are asking me, when can I pick up my coins? I want to chase this coin. I want to chase this coin. Well, now you've got Luna down 6%, right? And this is why it's always important to wait for those pullbacks. Luna got to 109. If you've not watched my video yesterday on Luna, I'm going to link that at the very end of this video. It's my buying strategy for how you can get into Luna, because a lot of people have been saying, is it too late? But the reality is you've already got a nibble now at 109, and this is how you buy on the pullbacks. If you appreciate my perspective and want to learn some more, consider joining the members-only course streams, ijaz.uk/members, and the links in the description. Thanks for watching, guys. See you in the next one.